Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today we're diving into Playa Hotels and Resorts proxy statement. It's a hefty document, but don't worry, we'll extract the key information for you. Think of it as trying to understand the terms and conditions before agreeing to a timeshare presentation that offers a free cruise. This proxy statement signals a major shift for Playa, potentially leading to its acquisition by Hyatt Hotels Corporation. Get ready, because this document has a ton of juicy stuff in it. First off, this is a Schedule 14A filing, meaning it's a definitive proxy statement filed with the Securities and Exchange Commission, or SEC. This document is used to communicate important decisions, especially regarding voting on company matters. Playa Hotels and Resorts is a big name in all-inclusive resorts, with 22 properties across Mexico, the Dominican Republic and Jamaica. They're a Dutch company, but their shares trade here in the US on the Nasdaq Stock Exchange under the ticker symbol Playa. That's all going to change because Hyatt, through a Sajalaria, is offering to buy Playa for $13.50 a share in cash. To make this deal happen, Playa is holding an extraordinary general meeting, or EGM, on April 17, 2025. That's where shareholders get to vote on the proposed acquisition. At the meeting, shareholders will discuss and vote on a few key items. First, they'll hear an explanation of Hyatt's offer. Then there are votes on appointing new directors, discharging the current board, approving a merger plan, and a non-binding vote on executive compensation related to the deal. Don't worry, we'll unpack all of these. There's a vote to conditionally appoint 3 new directors, Felicity Black-Roberts, Noah Hopp, and James Frank Rigg. These are Hyatt's people, signaling a change in leadership if the deal goes through. Next, shareholders are being asked to give the current board a discharge, basically a clean slate for their actions up to the meeting date. It's like saying, thanks for your service, no hard feelings. Then comes the vote on the actual merger, a triangular merger to be exact. This is a fancy way of saying Playa will merge into a subsidiary of Hyatt, with Playa shareholders getting stock in a new holding company, New Topco, which will immediately be cancelled and shareholders will receive cash. Finally, there's a non-binding vote on executive compensation related to the deal. It's basically a say-on golden parachutes for the top executives. The Playa board is all for this deal. They think it's in the best interest of the company and its shareholders, employees, and other stakeholders. They're urging shareholders to vote for all the proposals. The offer is set to expire on April 25, 2025, unless it's extended. Following the offer, there is a 5-day subsequent offering period. Once the deal is done, what will happen is that the company will execute notarial deed for triangular merger. Then buyer will give a loan to New Topco for cancellation of outstanding shares, basically a quickie way to cash out all the equity. To help them make this decision, Playa hired PJT Partners as their financial advisor. PJT Partners delivered their opinion that the offer of $13.50 a share was fair to Playa's shareholders from a financial perspective. If you want all the nitty-gritty details, the full text of PJT Partners' fairness opinion is included as Annex B. It lays out all the assumptions, procedures, and limitations they use to reach their conclusion. Playa has agreed not to go shopping for a better deal. However, if Playa receives a better offer, they can consider it, but they have to give Hyatt a chance to match. If they bail on the deal to take a better offer, they'll owe Hyatt a termination fee. Under specific circumstances, the Playa board may change its recommendation and start recommending against the deal, called an adverse recommendation change, but they must first meet a number of conditions. For the deal to close, several conditions must be met. This is called the minimum condition, meaning holders of a certain percentage, 80% unless amended to 75% of Playa's outstanding shares, need to agree to sell. The government must also approve, and there can't be any major negative events happening that hurt Playa's business. Normally there is a fee when filing something with the SEC, but that's not the case in this scenario. There are a bunch of ways the deal can be called off. One thing to note is that if Playa cancels the deal to take a better offer, they'll owe Hyatt around $56.33 million termination fee. If the deal falls apart because Playa breaches the contract, they will also need to cover some costs for Hyatt. Typically, all costs that occurred are borne by the company who incurred them, Playa included. To sweeten the deal, certain Playa executives and directors, representing about 9.8% of the outstanding shares, have agreed to tender their shares in favor of the deal. What happens to executives if the deal is approved? They receive a cash out for shares. But what about their roles? The SEC requires companies to discuss compensation for named executive officers in event of a merger. The top 5 execs get change of control payment and severance payments. Some of them could also continue being employed by the new entity. Hyatt has the financial backing to pull this off, and that the offer isn't dependent on them securing financing. You should also note that Dutch dividend withholding tax, dividend belasting, may be withheld on payments to US taxpayers in the back-end transactions. If you're not happy with the deal, you don't have the right to demand a special valuation of your shares. To make this deal possible, Playa, Hyatt and buyer have to use their best efforts to get all the regulatory approvals required to make it possible, including the antitrust one in Mexico. Before we dive into the numbers, one key point: Playa doesn't pay dividends, so shareholders aren't missing out on any income there. The price of $13.50 per share represents a premium of 40% over December 2024 price. And more importantly, that amount is the highest that this stock has ever traded for. If you want to dig even deeper, you can find more information in Playa's annual reports and other filings with the SEC. All of these reports are available online. Need help voting? Contact DF King & Co. Inc., Playa's proxy solicitor. They can answer your questions and help you make sure your voice is heard. One important detail is that all directors and executive officers intend to vote their shares in favor of the merger, except for one Mahmoud Kimji. The board doesn't know how he's going to vote his shares. This highlights alignment at the highest levels of the company and commitment to the transaction. As mentioned, this proxy states that the PJT partners believe the offer consideration is fair to the Playa shareholders from a financial point of view, which further boosts Playa's confidence about the offer. Importantly, the offer consideration represents a price per share that is greater than any price at which the shares have traded. So no reason to think it will ever go beyond that. Axing now, let's zoom out and give you my quick take. It is highly likely that the offer will be approved. A significant amount of shares have already been committed with the support agreement, and there are a few interested parties to make this offer even more enticing. $13.50 in all cash, and closing before the end of the year would be a nice exit. For those outside Playa, if you found this helpful, please subscribe, hit that like button, and leave a comment. Until next time, this is Corporate Decoder signing off.